Five stocks I'm buying now, April 2025 edition. Welcome in, folks, to my favorite video I do for you guys each and every month, where I get into the stocks that I am buying in the month. And this month it is April of 2025. If you're wondering why is my pool a disaster, we got a basketball hoop in the pool, cushions all over the place. It's because here in Las Vegas, believe it or not, it gets insanely windy in the spring. The whole house was shaking last night, and especially when that wind comes whipping off of this mountain here, it's ridiculous. Steel chairs that weigh 20 plus pounds were just blowing all over the yard. Man, it gets crazy out here, okay? Alrighty, folks, the five stocks we're getting into here today, four of these five are growth stocks. One of these stocks is a dividend value stock. And the reason I'm leaning heavier into buying growth stocks right now is because we have had a correction in the market. As of yesterday, the NASDAQ was down over 15%. And whenever we go through a correction in the market or a crash in the market, I lean in heavier to buying growth stocks, especially the further in we get to a correction or a crash. And the reason being is you usually get the best risk-reward profiles buying those sorts of stocks, and those ones usually bounce back the strongest coming out of that, okay? Alrighty, folks, there's one thing only I need from you guys here today for putting this video together for you guys, and that's for you to smash that like button, hit that thumbs up button on this video. It helps me out tremendously. That's all I need from you guys. There's a reason I got that sign in the garage right there, okay? I hope you guys appreciate me taking the time out of my day to do this video for you guys, okay? And additionally, if you're watching this video in the first few hours it is released, the one-day sale will still be going on. The April Fools Don't Be a Fool sale on my highest end Patreon tier. That tier is usually $125. You can get access today for $49. If you watch this video tomorrow or after, the deal will already be over, okay? Listen, I shouted this deal out. I let you guys know about it for the past week, so it's not my fault if anybody's not able to take advantage of the sale. Like, I let you guys know. I had a whole email list and everything prepared. So if anybody doesn't get this sale, it's not my fault, okay? That's on you. Pin comment down there for that. That's full access to my Become Master Stock Market course, full access to see the stocks I'm buying and selling each week, access to the Patreon Discord chat as well. Once again, that will be pinned comment down there, okay? And for a lot of you guys that are in your first year or two of investing, enjoy that Become Master Stock Market course. You're going to learn so much from it. It's going to help you out for years to go in the future, okay? Alrighty, guys, first stock of these five stocks up here is Sofi Technologies. Sofi Technologies is an $11 stock. The stock is up 60% in the past year. It has performed very, very well, okay? Now, when it comes to Sofi, this is a company that, in my opinion, is kind of at the cross sections of new age banking and fintech. They're digital first. They don't build branches like the traditional banks of like JP Morgan, Wells Fargo, Bank of America, those sorts of guys. No. They're digital first and foremost. They also will essentially be kind of the middleman for a lot of loan activity. And so that's where they kind of come in a little bit more like a fintech as well. And they do a phenomenal job attracting a lot of the younger generations, millennials, Gen Z, and I think even like a lot of the Gen Alpha folks will sign up for Sofi long term, okay? Now, when it comes to Sofi, this has been an absolutely extraordinary growth story of a company. Company can grow year in and year out and has very high growth rates. And that's despite everything that's been going on. High inflation, the student loan pause, everything like that has been going on. And yet Sofi has been able to still put up great numbers year in and year out and have tremendous revenue growth. And really, that's not expected to slow or stop anytime soon. The company should continue to grow at a double-digit clip when it comes to revenue for years and years to go in the future, if not decades to go in the future. And the reason being is they just continue to attract more and more members as their members' net worths grow, right? Because they attract a lot of young people, especially to Sofi. And they get more and more people in the ecosystem, have more and more products to sell them, right? Somebody might basically try to take out a personal loan through Sofi and get a much lower interest rate so they can pay off a credit card, let's say, for instance, right? But then that customer might end up taking out a car loan with Sofi long term, or a home loan, or many other products, okay? And so Sofi is able to attract people in the ecosystem and then have them have other products, right? Now, when it comes to Sofi and why I think this stock's really become such an attractive stock really in the past year is this used to be a money-losing company. They used to lose a fortune with this company. But recently, they flipped over to the magical side of profitability. And this is a huge deal for Sofi, not only in the short term, but for the long term of this company. No one at the end of the day wants to own a bank that loses money. Like, if you own a bank, they should make bank, right? They should make profits. And so now Sofi's flipped over that profitability side, and that's huge for this company. Now, additionally, if you know anything in the banking space, what is so important? The thing that is arguably the most important is, what is your balance sheet looking like? Okay, and if you look at SoFi's shareholder equity, it's up and up and to the right. And this is so important. Your balance sheet, your shareholder equity is everything when you run a bank, right? Because you got to understand, you will go through recessions, you will go through bad economic times, and when it comes to becoming a successful bank, let me put you guys on game on how you actually build a massive bank. If you want to know how like JP Morgan was built and became this massive juggernaut, here's how you do it. You make it through the recessions, okay? You make it through the crashes. You get out to the other side, you usually acquire other assets for pennies on the dollar, and then in those good economic times, you get more and more loan activity, you continue to attract more and more members, and you build bigger and bigger. Then the next crash happens, the next recession happens. You get through that, out to the other side, and you grow bigger and bigger and bigger. And that's how you become a giant, like JP Morgan, let's say, for instance, has become. So for SoFi, it's just all about getting through the recessions, getting through the bad economic times, making it out to the other side, right? Making it through the 2020s, making it through the 2022s, right? Making it through the great financial crisis, 2008, get out to the other side, prosper, grow your business bigger and bigger and bigger, right? Now, this company, you got to understand, when you're ever buying into a stock, the CEO is so important. I feel very comfortable with the gentleman that leads SoFi, Anthony Noto. He's a CEO of SoFi, has been the CEO for many years now at this point in time. He used to be a managing director at Goldman Sachs, one of the most respected financial firms, if not the most respected financial firm in all of the world, right? He used to be the chief financial officer of the NFL. And before that, he was a COO, the chief operating officer of Twitter, way back in the day. So when it comes to SoFi, I think this speaks volumes, because this is a stock I own in the public account. I own 3,700 shares. I do own in some other portfolios as well. I'm up 66% on this stock. And I'm still willing to go out there and buy it. I still believe this stock is a steal deal. And so the fact that I could be up, because you got to understand, it's easy for me personally to buy a stock I'm down on. If I buy a stock and I'm like, this is a great deal, and the stock goes down 10, 20% right after I buy it, that's easy for me to buy more and more shares, because I already thought it was a deal before I bought. Now it's down 10 or 20%, it's easy for me to buy. When I'm up 66% on a stock, and I'm still like, this stock is still a steal deal, that speaks volumes. And that's how I feel in regards to SoFi. And you got to understand, SoFi today, the reason I am investing into SoFi is because I believe that over the next decade, SoFi can become a financial giant. When we talk about financial giants in the banking space, we're talking about companies that will have $100 billion plus of market capitalization. SoFi today, this is a little teeny company in terms of market cap. We're talking a little over a $10 billion market cap. And I believe over the next decade or so, this is going to become a company that becomes a financial giant, $100 billion plus market cap. That's why I'm willing to place some chips on the table in regards to financials. Now, in regards to betting on a bank or anything in the banking space, I don't want to take too much risk. So you won't see me invest crazy money into it. But would I feel comfortable investing $50,000 or $100,000 into SoFi? Absolutely. Would I feel comfortable investing $1 million into SoFi? No. There are certain companies I would feel comfortable investing in $1 million into. SoFi, because in the banking space, what if we had some sort of massive recession, Anthony Noto over-leverage a company? Doesn't look like he's doing that. But what if he did, right? That would be problematic. But from what I see, the future for SoFi looks very promising, and so I'm willing to put some chips on the table. And so for me to invest $50,000 or $100,000 into SoFi, I feel very comfortable with that, okay? Stock number 2 of these 5 stocks, this is a new stock alert, folks, okay? I don't have 1 penny invested in the stock right now, but there's a very high probability I start a position in the stock in April of 2025. And that stock is Adobe. ADBE, Adobe stock. This is a stock that's down about 25% in the past year. This is a growth company. Now, I got to talk about the elephant in the room in regards to Adobe before we go any further, and that's AI. Because this is what I've done a lot of thinking, because I've looked at AI and I've thought, okay, there's a lot of new services and products that have come out that are for pictures and video and things like that, and a lot of Adobe's products have to do with pictures and videos. And the way I'll put it to you like this, I've done enough digging. I think AI is an opportunity for Adobe to grow their business. I also think it's a risk factor. Net, I think it probably doesn't mean much for Adobe when it comes to AI, because I think there's going to be some ways Adobe's hurt by AI products, and I think there's going to be some things that actually help Adobe. So net, I can't really come up with a conclusion that it does anything really that negative or positive. It probably just ends up being an equal, and Adobe just continues to grow at, really strong growth rates like they've been growing at, okay? And speaking about those growth rates, look at this. I mean, Adobe's a company you can count on year in and year out, giving you great growth. And there's not that many companies that are big dog companies that year in and year out grow very strong. But the thing you got to understand about Adobe, what makes this company so special, is they have a recurring revenue business model. This means this company is able to continually grow, keep their customer base, and as long as they attract a little bit more customers, or go up very slightly on price, their revenue is able to increase and increase and increase. Their business model is magical. And there's only a few business models in the whole stock market that are magical like this, that are truly recurring revenue stream business models. If you think about the opposite of a recurring revenue stream business model, it would be like a home builder, right? If you ever look at the home builder valuations, they're always garbage. Why? Because when you're a home builder, you have very limited TAM. Like, how many people really buy a new house in their lifetime? Very few, right? And additionally, if somebody buys a new home, you're probably going to never sell that customer another new home ever again as a home builder, right? You can't really keep selling the same customer homes again and again and again. It's very few and far between. Another business model that's what I would kind of categorize as that is car dealerships, right? I bought a lot of cars in my lifetime. I've never bought another car from the same exact car dealership, right? It'll be like, I'll buy one car from a car dealership and then that's it, right? And so that's another business model where they might sell you one car ever and that's about it, right? When it comes to Adobe, you got to understand their big product suite, which is called Adobe Creative Cloud. It's $659 a year. Most people that sign up for this, they stay signed up for it for years and years, if not decades to go in the future. You can also pay in a monthly plan as well, and they just kind of get to continue to make that recurring revenue streams. But on top of that, right, they have their Creative Cloud apps, $59 a month. They have Acrobat Pro, $19.99 a month. Photography, $19.99 a month, right? Photoshop, which is very, very popular, $22 a month, right? Adobe Premiere Pro, Illustrator, Adobe Express. And you got to understand, if you do anything in regards to photos, video editing, marketing related stuff, this is where Adobe's sweet spot is. All these sorts of products, right? Anything with documents. I mean, at the end of the day, it all comes back to Adobe. Adobe stock, $29.99 a month. And additionally, they have all these sorts of products that are for, like, somebody that might run a small photo business of some kind, video business of some kind, a small marketing business, but also a lot of big dog companies use them as well. And so they have their team plans as well for large enterprises. Now, when it comes to Adobe, I graded their last income statement here. This is an A- grade, phenomenal income statement. Their revenue went to over $5.7 billion from $5.1 billion. If you look at their gross profit, it went to almost $5.1 billion from $4.6 billion roughly, right? Additionally, if you look at their operating income, $2.1 billion versus $907 million. Their net income went to about $1.8 billion from $620 million. And their diluted EPS went to $4.14. So phenomenal income statement. Additionally, in regards to their balance sheet, if you add up their short-term investments plus cash and cash equivalents, they're at about $7.5 billion roughly versus debt, long-term debt on the company of about $6.1 billion. So they could basically wipe out their debt tomorrow and still have $1 billion plus around to play with here. So phenomenal balance sheet. So at the end of the day, when it comes to Adobe, I think this is likely my next new position in the big dog portfolio, the public account, which is around $2.8 million. This looks like a natural great position that I could add to for the next many months and feel very comfortable holding the stock for the next number of years, despite all the stuff that's going on, right? And you know what else is great about Adobe? Some of these stocks that we're going to get into in this video here today, some of these stocks have to deal with what? Tariffs and all the tariff drama. Adobe doesn't have to deal with that. Adobe is a software business. They don't have to deal with all that tariff stuff and making a product in one country and then have to worry about a tariff here and trying to offset that. They don't have to worry about any of that. And that's a beautiful thing for a business model like Adobe, okay? Alrighty, guys, stock number 3 of these 5 stocks up here today is, this one's a beaten down dog. It's a beaten down dog stock, and that is Nike. Nike, this is a dividend value stock. It's a $64 stock here today. Oh, do I love buying every share I can get my hands on in regards to Nike right now, right? No, you gotta understand in regards to Nike, what makes Nike so special is the brand, right? The brand is just a one-of-one brand. It's one of the greatest brands in the history of mankind, like a one-of-one, right? And additionally, now they have Elliott Hill running the company. Elliott Hill was a phenomenal executive of the company for decades. And then the board of directors made a big mistake. They brought in a consultant instead to be the CEO, and he made a lot of bad mistakes in regards to Nike over the past number of years. And Elliott Hill has come in to clean up the mess, essentially. And that's exactly what he's doing. I mean, the conference call, Nike's latest conference call was one of the best conference calls I listened to, honestly, probably in the past year. The vision he laid out for what they're up to in regards to Nike is, it's unbelievable, okay? Now, everybody's also selling off Nike stock over the past, basically since Trump got elected, because they're worried about tariffs. Oh, U.S. brands make products in Vietnam or other countries like Nike and blah, blah, blah. I don't care. Meh. Tariffs come and go, okay? At the end of the day, Nike's been around for decade after decade after decade, and they make it through all the messes. They make it through all the different presidents that come and go, all the different geopolitical environments that come and go. At the end of the day, Nike's got this game figured out. I listened to the conference call. They already have a plan in place if tariffs of 25% or whatever number are enacted. They already got plans around that and how they're going to offset that and mitigate that. So at the end of the day, this short-term stuff is just silly. It's silly. And the worst part is all the short-term stuff, it gets everybody freaked out. It gives people like myself that have long-term visions the most incredible buying opportunities, because I'm able to scoop up Nike shares in 60-something dollars, and for a stock that's going to be $180 plus long-term, right? Now, the expectations are on the floor in regards to Nike's revenue. No one's expecting anything from this company, and I think I see Nike getting back to growth as early as the back half of this year. And so that creates a pretty compelling environment, because when Nike starts reporting revenue going up again, it's going to be a huge moment for the stock. And the stock is going to blast higher when that happens. Now, additionally, earnings per share is on the floor for this company. I expect the earnings per share to start to go up substantially starting the back half of this year. I'm not talking we got to wait 2 years from now for the earnings per share to start going up again. I'm not talking we got to wait 5 years. No. In the back half of this year, I'm expecting earnings per share to start going back up. Based upon the cost cuts they've done, based upon I expect revenue to start going back up again, margins to correct. Oh my gosh, okay? And you know what's going to happen when that earnings per share starts going up in a substantial way on a year-over-year basis? And the best part is, then they're going to have insanely easy comps in the front half of next year, and then they're going to be able to keep the momentum going over the next several years. So you're going to have several years of revenue growth, margin growth, and earnings per share growth. It's not like it's just going to be some short-term blip. No. We're talking years of growth ahead in regards to this one. Now, additionally, you look at their free cash flow, right? Trailing 12-month free cash flow of $5.5 billion. That's an insane number considering this is during bad times for Nike. Nike's going through bad times, and they're still throwing off free cash flow of $5 billion plus. How many companies are doing that? That's insane. So when it comes to Nike, you got to understand, just like many of Nike's athletes, you just can't beat them long term. Company after company tries to dethrone Nike decade after decade, and they fall flat. And the reason being is they're not willing to invest in their brand the way Nike's willing to invest in their brand. Nike is willing to focus long term. And, because you got to understand, Nike, with their numbers being rough recently, they could have cut way back on marketing. They could have cut way back on athlete contracts, right? Demand creation expense, all that stuff. They don't do that. They say, you know what? We're going to continue to spend heavily on our athletes. We're going to continue to have the best athletes in the world. We're going to continue to build our brand, focus on marketing, right? Focus on product, innovation. And that's what they do. And they pour an immense amount of money into the business model, billions and billions and billions of dollars that no one else can do. And that's how they remain on top, decade after decade after decade. And so in the 2030s, the most successful brand in the apparel space will still be who? Nike. And there'll be a lot of brands that are hot, that are then going to be struggling. We'll be talking about bankruptcy in regards to those brands. And that's what happens decade after decade. Somebody will try to disrupt Nike for a little bit. Their numbers will get a little tough. They continue to invest into their brand. And then the hot brands, a few years later, they're $6 a share. People are talking about if they're going bankrupt, right? And then Nike's more successful than they ever been. And people are like, geez, how did they do it again? It's the same story again and again with this company, okay? Can't beat them. Alrighty. Stock number 4 of 5 up here. We're back to growth companies now at this point in time, and that is E.l.f. Beauty. Growth beast. This stock has been hammered over the past year, 67% down. What a tremendous buying opportunity for folks that are buying the stock now, like myself, okay? Now, you got to understand, in regards to E.l.f. with me, I started buying the stock when it was $7 a share back in like 2019. And Tarang, the CEO of this company, has done an amazing job. Even with the stock crash, think about how much money I've made in this stock, or investors have made in the stock that bought this stock prior to Rona. It's insane. He's done a heck of a job running this company. If you want a snapshot of the company, keep in mind this is around a $3.5 billion market cap. That's how low it's gotten now at this point in time. $1.3 billion in net sales, fiscal year 2025 outlook. 30% net sales compounding annual growth rate of this company. $291 million in adjusted EBITDA. Number 1 in U.S. color unit share in the cosmetics industry, right? Number 2 in U.S. Color share. Top 10 U.S. skincare brand now at this point in time. And if you look at their growth here, unit growth last year, 23%. And look at everybody else, very negative. They're the one that's like growing very substantially. 24 consecutive quarters of net sales growth and market share growth. One of one cosmetics brand, one of one, out of 988 to gain market share for 24 consecutive quarters. One of one. That's insane, right? Now, when I look at a company like E.l.f., right, in the type of growth rates this company has had, the type of growth rates I expect them to have, I don't care about all the short-term crap. There's another one, tariffs, oh my gosh, tariff, blah, blah, blah. They can easily offset that, no problem at all. Their products are like $5 to $10 products. They can easily go up $1 or $2 on their products, and it's not like everybody's going to say, no, I'm not buying E.l.f. now. It doesn't work like that, okay? So all the short-term crap everybody's tied up into, what's their growth rate going to be? I don't care. As a long-term investor, I stay the course because at the end of the day, I see E.l.f. being a $200, $300 stock again in the future. And so, everybody can get worried about if it's E.l.f. going to $50 or $70. I'm worried about E.l.f. going to $200 over the next few years. Now, the company doing $1.3 billion roughly in sales right now. They expect a 2x their cosmetics business, 2x skincare, 2x international. I think that's easy peasy. I can see them 10xing their international business over the next decade, essentially. They're expecting to go to $3 billion in net sales here in the future, right? Keep in mind, for a company that's at a $3.5 billion market cap right now, on net sales of $3 billion, I could see them throwing off probably $600 million of net income at that point in time, which then you could value this company at a $9 billion plus market cap, right? Easily at that point in time. So when it comes to E.l.f., this is the ultimate compliment, because you got to understand, in the public count, I'm up 767%. And I'm telling you, E.l.f.'s a steal deal right now. And so that's the ultimate compliment. If I could be up 767%, I'm like, this is still the steal deal of the stock. But you got to understand, when I was buying the stock back in 2019, this business model is in a very different place. People are very worried about the future of E.l.f. It's in a very different place now at this point in time. E.l.f.'s a juggernaut of a company, an absolute juggernaut. And this company's growing all over the world. And you got to understand, because they're so successful on social media, because they're so successful on Instagram, YouTube, TikTok, all these sorts of platforms, when they go to enter a new market, they're able to be successful from day one, because people in other countries are also on social media and they see all the products and services. And so they're able to go into a new market and be successful from day one. It's not like the old school days of like, okay, we got to start grassroots effort to get people to understand our brand, know our brand. No. They go to some new market. People know about them from day one. They're excited for the product in day one. And so that's amazing when it comes to E.l.f. And that the international opportunity is insane for this company, okay? Those stock number 4 or 5. Stock number 5 of 5 up here is, it's honestly a very impressive company. And it is Honest, HNST. I mean, what a turnaround for this company. What a turnaround. The company's stock price is up about 17% in the past year. It's a baby market cap. This is for sure the smallest market cap company I'm talking about here today. $500 million market cap on this one. Little baby company. And speaking about baby company, their main products that this company sells are diapers and wipes, okay? and very high quality products, about the highest quality you'll find out there in this category. Now, they also have bath and body products, skincare products, lotions, soaps, shampoos, all that sort of stuff. Business model you might not think is the most exciting, but it's a good business model, and it's a needs-based business model, right? A lot of their skincare products I also personally wear. I have many different Honest products that I'll wear at night. And then this is Estee Lauder brand, by the way, E.l. I also like E.l. stock right now as well. I like a lot of these like cosmetics companies, skincare companies right now. I like E.l. right now. I like E.l.f. right now, and I like Honest. All three of those companies are just bangers right now, right? Now, Carla Vernon came in at this company shortly after she took over. It was a $1 stock. People thought this company was going to be, headed to bankruptcy. I'll be completely honest with you. You don't get down to $1 a share without being priced for bankruptcy. People thought this company was going to go bankrupt, and guess what? They didn't, right? And the revenue has now been uptrending very nicely. The way she's turned around this company is nothing short of historic, in my opinion. The margin improvement is one of the most insane margin improvements I've ever seen in my 16 years plus of being in the stock market. I don't know if I've ever seen margins improve this much. Margins, shortly after she came in with the company, were like 25%-ish range, and now gross margins have approached a 40% number. And it looks like they're going to go even higher. That's crazy. Absolutely crazy. Additionally, shortly after she took over this company, they were losing a fortune. And that's why a lot of people thought this company was going to go bankrupt. Their balance sheet was starting to get in a very bad place with the company. Their earnings per share was awful. They were losing a fortune. And now this company is flipping over to profitability. What a historic turnaround. And why is that? Well, one, their revenues are going up, right? Two, their margins are going up. So if you have revenues going up, your margins are going up, right? And you're keeping your cost relatively steady, guess what happens? Your earnings per share starts going up. And keep in mind, the earnings per share, in my opinion, over the next couple of years here is going to explode higher, like absolutely explode. Now, additionally, this is unbelievable. Two of the most impressive things here, the balance sheet. This is as of their latest quarter they reported a couple months ago. Cash balance is $75 million. That's a huge number. Keep in mind the market cap's barely over $500 million. $75 million cash and no debt. They have a beast balance sheet. How many small cap companies have a beast balance sheet? Very few. And keep in mind, remember, 2 years ago, people thought this company was going to bankruptcy. And so how fast she's turned, and so it also makes you think, if she's turned around this ship this fast and gotten them in this good a place in 2 years, right, roughly, a little over 2 years, what's she going to pull off over the next 2 or 3 years if she's done this much, right, this fast? Revenue, their latest revenue numbers were up over double-digit percentage revenue growth, over 10%. That's strong growth. Like if Honest can grow 5 to 10% and continue to grow these margins over the next few years, you know what's going to happen to the earnings per share of this company? It's going to go to insane levels. And next thing you know, we'll be talking about a company that starts bringing in several $100 million of net income a year. And then when we start talking about that, then we start talking about this is going to grow to become a beast overall company, right? So I have 1,100 shares in the public account as of right now. I have another 50,000 shares in another portfolio, another 7,700 shares in another portfolio. I think this stock, if you're wondering where the stock price is going, I think it's going to be $10 plus at this time next year. And I think this is a $30 plus stock long-term based upon where I see their net income going over time. So Honest is honestly a pretty extraordinary opportunity, right? And by the way, I like AMD as well. So I know I wanted to keep it at just 5 stocks, but if I had to put a 6 on here, AMD would have made the list as well, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. There's 11 hours left as of recording this. If you're watching this, there's going to be even less time left for that sale. Usually that tier, that's the highest end tier for my Patreon, it's usually $125. It's available for $49. April Fools, don't be a fool sale. Don't be a fool. Learn this stuff on a high level. You need to understand income statements, balance sheets, cash flows, P/E ratios, how to value companies properly. If you're getting a great deal, if you're getting ripped off on a stock, quit gambling money around, just throwing money in stocks. Start taking this stuff serious. Get access to that deal. Enjoy the Become Master Stock Market course. See how I build a portfolio from a small amount of money. That's very, very valuable. Okay. All right, guys, pin comment down there. Much love and have a great day.